Hello from Trend Signal for our review of the data and events the week beginning the 20th of March. We start the week with Far East markets mixed. The Hang Seng up, ASX and Straits Times down. Holiday in Japan, spring equinox. Not exactly bang on spring equinox. I think that's the 21st in fact, but they have a holiday in celebration, so no Nikkei. Theme of the latter part of last week has continued. Mixed equities, weak US dollar, firming bonds, and obviously strong US dollar-based commodities likes of gold continuing to power ahead. Last week, equity markets, certainly the US, were a little bit subdued. The Dow and the S&P only managing very small gains. FTSE up 82, DAX up 132, and the Nikkei down 83 on the back of a stronger yen. In fact, the weak dollar was the story of last week following the FOMC's decision to raise rates as expected by 0.25%. Dollar index down 1%. So we saw the euro against the dollar up 66 points, which is 0.6%. Sterling very, very strong showing following the minutes of the MPC that suggested or said that one member of the committee voted for a rate rise. So one dissenter. And dollar yen down 200 points on the week, so what's about 1.8%. Gold reacting to the weaker dollar, up $25 on the week, up 2%. Oil, bit of a flat week really following the breach of some key support the previous week. Actually, oil managed to rally about $0.50, but nothing in relation to the significant fall from the previous week. So still under pressure is the consensus there. So this week's focus, as I say, remains the move by the Fed last week and the market's reaction. In effect, I think the markets were looking for a more hawkish Fed, and they didn't get it. The Dutch elections, whilst Geert Wilders was never going to be able to form a government, because no other party would want to go into coalition with him, most analysts were surprised by his poor showing. So Europhiles took immediate comfort from the results, which I think partially explains the more positive moves in Eurozone equity markets. However, the main event, the French elections, now start to loom large in the market's focus. The first of three televised election debates is on Monday evening. The latest polling from Odoxa has Macron slightly ahead of Le Pen in the first round, with Fillon a distant third at 19%. Interesting to note, though, in the second round of polling, Macron is way ahead at 64 to 36 against Le Pen, a significant gap that commentators think is unlikely to be made up. That's if you believe pollsters, and from last year's showing, I guess you would be forgiven for saying that you don't believe them. Equity market sustainability is coming into question a little bit from several media outlets, the likes of the FT. Look at a couple of reports on Monday morning. Record-breaking 2017 VETS fuels fears of stock market bubble. From Market Watch, investors are increasingly looking for that overdue sell-off in stocks. And in fact, there's another article in the Financial Times that focuses on corporate profits outlook in the US. Profits expected to rise 9% in Q1. I hear everyone saying, well, what's wrong with that? Which is far better than the 4.9% in the fourth quarter last year. I think the problem is that profits were predicted to rise 12.3% in the year. So I think what the FT is implying that estimates are for slower growth in profits than originally envisaged, and basically making equities look expensive. The FT also quotes a valuation measure by Robert Shiller, the Yale economist, that the adjusted price-earnings ratio in the US is at a 15-year high. Not really the comforting research that rampant bulls would like to hear, I suspect. In the calendar, or on the calendar this week, a very light calendar really, following last week's rate move in the US. Focus is on inflation in the UK as prices start to feed through to higher inflation. Obviously, 2.1% the target. The forecast, I should say, 2% is the target. So that's an interesting one there. With oil pulling back over the last couple of weeks. I think economists may start to pare down some of their inflation forecasts, but certainly 2.1% would be significant if that is the way it turns out. Thursday we have a raft of manufacturing PMIs from the Eurozone. For some reason on Forex Factory they're listed as medium impact, but if we go down to Friday I should say, Friday we have manufacturing and services PMI data, all very solid numbers, at least that's the forecast, well above 50, which puts both sectors in expansion mode. So the recovery in the Eurozone continues. Not necessarily a pace, but it does continue. Friday we have the release of durable goods in the States, which is probably the most important number in the States this week, expecting a figure of plus 0.5 after a revised, slightly revised up number from the previous month. Apart from that, several central bankers speaking this week. Monday is a big day. Buber president, that's the Bundesbank president Jens Weidemann, talking at 4:45 on Monday afternoon, early evening. And we have two other central bankers, a member of the Federal Open Market Committee, and also from our own Monetary Policy Committee in the Bank of England. And then in the evening, we've also got President Trump speaking. So there's quite a slew of speeches to take in, added to the fact that we've got the first French debate, so it could turn out to be a very interesting evening, Monday evening. Aside from that, we got two more central bankers on Thursday speaking. Our own Mr. Broadbent from the Monetary Policy Committee is speaking early doors on Thursday. And then probably the most important one of the week, although the topic is not that important, Janet Yellen, the president, or the chairperson, I should say, of the Federal Reserve, is speaking at the Federal Reserve System Community Development Research Conference. That's an interesting one, but nevertheless, she can and may well make remarks about current monetary policy, and that has the potential to move markets. That's it. Thank you very much for listening. All the best. Bye now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.